Limited partners can make a lot of money because they can invest in a little bit in one and a lot in another. We're not in 5 or 10 states. We're in one, California, because that's enough. We find enough deal
Even
flow.
if you're a passive investor, you still get the benefit of favorable tax treatment, the depreciation.
Hey everyone, welcome to Multifamily Mastery, Unlocking Wealth with California Real Estate. I've got your main host, Bill Mulkey, owner and founder of TR Wealth Management, along with Duane Lappinga, Director of Asset Management. Today we are flipping the script. I am producer Rachel, I'm their producer, and I'm going to be asking them the questions today. Today's episode, you should become a passive real estate investor, unlocking opportunities through value add syndication. We're going to be a little direct in this episode, correct, guys? Right?
Yeah.
You should become a passive real estate investor, unlocking opportunities through value add. So we're doing it this way so that both of them can answer and respond, because there's such a wealth of knowledge between the two of them. So I'm going to be in charge of this. I think, Duane, are you uncomfortable with this? Or are you happy that you're not the one leading this?
I love it. I can just sit here and respond to you. I don't have to think as hard.
Okay, so Duane, we're going to actually start with you. First of all, what is a passive investor and how do they fit into a syndication deal?
A passive investor is typically one of the members, not the managing member, but a member of a limited partnership or a limited liability corporation. And owning real estate through a vehicle like that puts the investor at arm's length from the asset. In this case, it's a building or a property. So worst case scenario, trip and fall, there's a lawsuit. You're not named on the lawsuit as a passive investor. You don't show up on title. Typically, you don't sign on loans. There are exceptions to that. If you're a huge percentage of the deal, then you might have to sign on the loan, but typically you do not. And so that's often attractive to people because they just want to invest, but they don't want it to disrupt their life. They want to place the money and to some extent forget about it, not be bothered by it.
So syndication deal, for people who don't know, like me, because I have no idea what a syndication deal is, that means what? A group of people are putting their money in, right? Is that what a syndication deal is?
Yeah, several investors pool their money. And with us, we're buying multifamily properties, but it could be any kind of real estate. People have done this over the years a lot with oil fields and those types of assets. There were syndications to buy stocks going way back into the 1920s and stuff like that. And it used to be a long time ago, the only way you could get into these is if you went to the country club and hung with the wealthy boys. Let's face it, it was mostly males and mostly people that were already rich getting richer. And in this day and age, syndications are becoming more and more available to the general public.
Okay, so Bill, you've been the GP for dozens of passive investors over the years. So what benefits did you see for LPs?
If you want a full-time job, you could be a GP. You have to sweat everything. You have to fill all the loan paperwork. You have to take on all the loan liability. If something goes wrong with the investment, you have to answer to several people. Sometimes these syndication projects are huge. They have lots of investors. So they don't even get a lot of time with the general partner sometimes. We're different. We're a smaller niche company, so we're able to talk to the directors. You have management issues. Do you want to manage the manager? Do you want to collect rents from tenants? Do you want all those hassles? Daily decision making is quite you can drown in it. I come to work to do something one day and I've got a lot of other fires to put out. And you really hear a lot of things about partnerships, general partnerships and limited partnerships going bad when bad times happen. But even in good times, there can be issues. Like some people want to sell and some people want to buy. So we have our directives, we have our common operating agreement that dictates that. You got to pay legal costs for that and you got to interpret it. And most important, you have to educate your partners on what the rules are and how you can sell. And there's just a lot of things to do here. And if you're really not an expert at it and doing it for a while, I don't think you have a right to lead people and tell them what to do. And what advice to give. If you don't have a degree, a broker's license or experience, you really shouldn't be doing it. And I see a lot of guys just out there trying to take advantage of the market and just buying something and putting people together and fundraising. And the fundraising people don't even know anything about the clients that they're talking to. And that's a mismatch. That's not good. So you want everybody in the boat to have a good time. And I'm in charge of that.
Okay, Duane, besides what Bill just mentioned, why else would an investor want to be an LP versus direct ownership?
Sure. So I talked about being at arm's length, which is a risk thing. But a lot of times I'm the one that onboards investors a lot for syndications that we do. And people are, what's this about? And what do I have to do? And it's so incredibly easy. You literally sign your documents via nowadays an electronic service like DocuSign, or we have something built into our investment portal where they sign documents and then they fund their investment via ACH. And the only thing that's left for them to do is to collect money. Used to be you got checks in the mail. Now you get ACH distributions into your bank account. But all the stuff about being responsible for the property, the maintenance, the calls from the tenants, what do we do if the building needs work? How do we budget for the project? How do we find the contractor? A passive investor doesn't do any of that. They don't even have to recommend or consider it. Bill gets to, as the GP, he gets to carry all that weight.
It's a lot of fun, Rachel. And I have people calling you up when I early started here. What color paint should I use? I'm like, just take it easy.
Home Depot white.
Exactly.
All right. So both of you already discussed this. Is there anything else, Bill? You're familiar with the risks of real estate. Talk about some of the responsibilities you take on as a GP and how an LP is protected. You both touched on it. Do you want to go further with that, or do you want me to move on from that question?
Yeah, there's more. So there's the taxation and accounting. So as an LP investor, you get property operating statements on a quarterly basis. So you can see what's going on with it, but you don't have any responsibility for preparing the accounting. When it comes to tax time, the syndicator finds the CPA, fills out the tax return for the entity, and the LP investor gets a K1. The K1 is not direct ownership of real estate, it's ownership of a partnership. And on your taxes, there's literally 2 or 3 boxes on there that you're filling in. It is so easy to do your taxes when you're an LP.
Duane, why would an investor choose to be an LP in real estate when there are so many investment options out there?
Sure. We actually mentioned this in our previous episode, but another quote from Warren Buffett: don't invest in a business you don't understand. I have a theory that everybody understands real estate because we all either rent or own a home, or perhaps we've done both over the years. Most of us probably have done both. So when we enter into a real estate investment, we already have a built-in advantage over these other things. I've read 2 books on crypto and I still don't understand it. I'm still trying to understand stocks. I do understand some, but it's a lifelong learning thing. And I don't want to minimize what people in real estate do. There's a lot of skill, but still, I think it's easy to wrap your arms around a real estate investment.
Okay, Bill, people want to achieve real long-term wealth, not just a few little wins. So can an LP really make life-changing money in real estate? Sometimes it just seems like GPs are the ones that are making all the money.
Yeah, I know. I get that. Why do you charge these things? Why do you make this money? I think we went over all the hard work ethic, but how do we pick the best property to buy? How much time, money does that cost? How do we arrange all the people and get them all together and make sure that they're all happy to get on this long-term cruise we're going on? We own properties 3, 5, 10 years or more. So we need to make sure everyone's happy and has the same kind of expectations. We're managing people's expectations, and that's not always easy. Everyone's a little different, especially the way they treat money. But limited partners can make a lot of money because they can invest in a little bit in one and a lot in another. They can choose the amount of investment they can do. They can invest in several properties with us. We're doing several a year. We're probably doing one a quarter. We're going to be doing a real estate fund, so you can diversify in that. So I think the basic thing I want to say is you can put in as much as you want. And if you don't want the asset, you don't like the asset, you can forego and say no. You can also bring your money somewhere else. We're probably not a one-stop shop for everyone, but we're in multifamily in California. There's nobody better because we give the attention. We really painstakingly go through each deal. We look at 200 deals to buy one. And if we don't get the right price, we don't buy it. And we also don't overspend. There's a whole part of the acquisitions part that I just talked about. Then there's onboarding people, which Duane handles too. And then there's analysis, as both Duane and I do, with all kinds of estimates and bids, budgeting, things like that. So an investor can do very well because over time, the real estate grows in value. There's a principal reduction in the loan, so they gain equity. There's a cash flow or dividend in the property that's paid quarterly. And since we add value, there's a lot of tax advantages too after you get your return. I was going over someone that invests in notes, and after taxes, our return kick butt on what they were doing. And they always had to find a new deal and take new risk and all that. Over a long term, you can make a better return on what we do because the money's kind of held a little bit longer and there's a lot of engines working for you. I guess that's what I'd like to say.
Okay, Duane, now that we're talking about money, you are the asset manager. Looking more from a dollars and cents perspective, how could an LP investor build substantial wealth?
Sure. So if we're willing to take on a little risk and do more heavy value add deals, buying property that needs a lot of work and hasn't been managed very well, you could double your money in 2 to 3 years. So you could start with $100,000, and in 10 years that could become $1 million. Now Bill's probably cringing because he's, hey, I can't guarantee that. And that's true. Usually pro formas are pretty conservative, but if you look at our track record, for instance, we've averaged almost 30% per year return to investors. So that means that you're doubling your money in about 2.5 years. Yeah, we say get rich slow, but before you know it, the years are going by and that money is really starting to accumulate. And we've seen that with a lot of our LP investors. A lot of them have become wealthy investing with us. Bill always likes to say that some of them, a classic line is, wow, I wish I would have put in more.
Bill, I'm going to put you on the spot then. Do you have examples of LPs who've done well in real estate?
Absolutely. I have many of them. Some I've known my whole life, 6th, 8th grade. I've invested with people like that, people in my neighborhood, friends and family. Also people that I've met through other people. Generally, that's how we become acquainted with people, is they're referred in or they're attending our podcast webinars or just looking at our blogs and stuff like that. And they have a lot of questions. And then once we settle down and have a meeting with them, if they can open up to us, the better. It's like a doctor patient. The more they open up to us and we can run some tests and look at their data, we can really show them. A lot of people think they're making more money than they are. And they also don't invest by themselves very well because they've got another job to do. And I have 5 or 6 people doing the job that they're going to do. And they've been doing it a lot longer. They're all trained in different aspects: management, asset management, investments, trading real estate, buying real estate. We buy low and we sell high, right? That's our objective. It's very simple, but there's a huge process that goes into it. So yes, I have investors that keep saying, you're never going to do as well as this deal. And I keep doing it over and over again. And they've done 4 or 5 deals and they come back. We won't have people come back unless they're happy and they're referring people too, which is super. That's the whole reason why, the visionary here, we founded it, and why we're doing it is to really help people. And we use the example of $100,000. If you double it, it's $200,000. That might not change someone's life, but it shows that the new investor or the investor that's starting early can get started with a lower amount of money. The guys that are really doing it and professionally doing it with us, if they invest $1 million, they double it. That's $2 million. That's something to be said. So you only get what you invest in a way.
So do either of you have anything else that you want to say? I love the idea of being aggressive. You should become a passive real estate investor. I love that you guys are the ones that actually handle all the work. Do you know what I mean? It's for people that are just getting into this and don't have the wealth of knowledge that you guys have. It's such a great opportunity. Do you guys have any closing comments?
Sure. We should point out that even if you're a passive investor, you still get the benefit of favorable tax treatment. So the depreciation and mortgage interest that's written off on the property often means that you'll be taking a cash flow distribution, and that distribution is in effect tax-free. And that's usually the case for at least the first 5 years of a holding, because there's a lot of write-offs up front. And we're still depreciating assets that we've owned for more than 10 years. Another thing is this field is now open to everyone. I was talking about the country club thing. Thanks to in 2012, coming out of the Great Recession, there's something that went through Congress called something like the Jobs Act or something. I think I might have the name wrong, but it allowed people who are doing these syndications to raise money from the general public and even advertise. You just have to follow rules about making sure the investors are accredited. So they have to have a certain amount of net worth to protect people that can't really afford to be placing money in these investments. But this is now available to the whole world, and you can do all the investment electronically. So it's very easy. You can do it from your own home. But at the same time, unlike investing in a stock or something, these syndicators are smaller companies. We're a small company. You can call up the president, Bill, or the asset manager, me, or if you went with another syndicator, similar thing. It's much more accessible. You can ask about your investment. We said place the money and forget it. That's true if you want to forget it, but if you want to talk to us every day, you can. We see all kinds of range of investors. Some say, just send me my checks. I'll talk to you once a year. And some are calling every 2 weeks. Hey, what's going on with that property? And we really embrace both. So this is a unique opportunity for the smaller investor in this day and age.
Bill, do you want to add anything else?
Yeah, I'm cringing. I don't want someone to call me every day, because if they call me every day, then they should do it themselves, really. Or they can try to find a job here, every day or every 2 weeks. I mean,
hey, Bill.
I'm sorry.
I was exaggerating.
Okay. I hope so. But anyway, the biggest thing, though, the biggest takeaway is deal flow. What about deal flow? You're just going to go find them in the multiple listing service deals? You're just going to go door knock and see the guy with the car parked up in front of the lawn or not painted? You're just going to go approach the guy. You're going to find his phone number. We're going to do all this stuff. And we've been doing this a long time. So you got to go with a method that's working. And we're not in 5 or 10 states. We're in one, California, because that's enough. We find enough deal flow at great prices and different strategies to employ. The guys there's too many people doing this, to be honest with you, that don't have the track record, that don't have the knowledge. I see so many podcasts where the guy was like a painter, and then all of a sudden he's a syndicator. It's like, okay, that's great. How much financial stuff do you do? What about the legal? And how can they afford to hire everybody out on a painter salary? I don't know how they're doing it, but some of them are getting quite lucky, and now that things changed with the interest rates a little bit, they got stuck. We don't having those problems where we invest well, we buy below market, we add value, we make the tenants happy, we make the partners happy, and we do everything A to Z. If they want to do that, I'm all for do-it-yourselfers, but you're gonna find at some tasks you're not going to be good at them, or you're going to be working for $10 and $20 an hour. It's hard to make money.
Oh my gosh. All right. Well, if you guys are listening to this and you've aligned with Bill and Duane, and you feel like TR Wealth Management could be the management company for you, feel free to contact them. Go to trwealthmanagement.com. There's a whole little contact form right there. You are available. You do make yourselves available. You want to talk. You want to have this conversation. So if you're interested in becoming a passive real estate investor, give them a call. trwealthmanagement.com. Thanks, you guys.
Thanks so much.
Thank you.